Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks. And today we're going to go back into the basics of looking at technical analysis and some patterns. And we're going to look at the ascending triangle, which is a continuation pattern, which means it continues from the previous trend. We're going to take a look at what it looks like, the previous trend, volume, projection, entry points, and a few tips. So these are the points that we're going to cover. So first off, what does it look like? So when we look at the ascending triangle pattern, basically what you're doing is when you're looking at this ascending triangle pattern is it's going to create a pattern that's somewhat similar to this, okay? Now, as you make your way and move into this, it'll come up and hit kind of that first level of resistance over here. It'll come down and probably hit another level of, this is your support level as we go into the lower level of the triangle. It'll probably come in here. It could bounce around. It might go into a second point. Okay, so as we project here, and finally we'll break out somewhere maybe about 80% of the way of that triangle. So you're kind of breaking out somewhere at that level. Now, it might hit these points 3 times. I could hit it 4 times, but there's kind of your breakout point. Okay, so that's basically what the ascending triangle looks like. The previous trend is, of course, an uptrend. So that means your next trend is also, because it's a continuation pattern, an uptrend as well. As we look at the volume, when you want to look at where the stock is going, you're always looking at the volume. Typically, you want to see strong volume here coming in, but then it'll probably die out because that's why we get that pullback, right? So we get the selling pressure that comes in. And then again, you get more volume usually on these upward movements. Now, sometimes as we go into this triangle pattern, the volume actually may kind of decline. Okay, but as you compare kind of ticks for ticks, so as you look at maybe the closer ticks on a day-to-day basis, typically the bullish volume will be greater than the bearish volume. But overall, the trend may actually decline because what's happening is you're just consolidating, you're distributing, you're basically waiting and digesting this move, and then what happens is later you'll get that influx of more volume as we break out again. So the volume will pick up and start to accelerate on that breakout. Now, when we look at the projection, okay, how far can this go? Really, you're kind of looking at this range between the triangle. I like to look at, a little more conservatively, so you can say, okay, well, basically this big range from that swing point to that bottom range of the triangle is what you're going to look for as a projection. Does it always hit that exact point? No, it's just a guide. So give it about that much. So we move over here, so it'll probably hit somewhere around that region from the breakout point. So you're looking at the big base of the triangle from that rejection to the bottom. So from the resistance to the support, take that, move it over to where the breakout point is, and that's kind of the target range. Okay. Again, would I take some profits before I hit the target? Absolutely. I would, if you had 100 shares, take off maybe 70, 80 shares, whatever the case may be on your risk management style. But that's really what you're looking for when you're looking for the projection. As far as entry points go, well, because you really don't know if this could be a triple top, right? So a triple top typically will hold a support a little more flat, but really this thing could roll over and still head down. So you need to be careful about that. So that's a little tip. But your typical entry point, if you do get that breakout right there, this would be the entry point, is right after we break out of that resistance level on that triangle. So that could be an entry point. At times, you'll get this to roll back and bounce and check this support level now, and you could get a second entry point there. If you miss the move, it doesn't always happen. Sometimes the breakouts are fast, but sometimes you get a pullback and then you get a bounce, and that could give you a nice entry point as well. If the stock actually ends up rolling over and this ascending triangle pattern doesn't work out, let's just say all of a sudden you get bad economic news or something like that, and it rolls over, well, you could look at a shorting opportunity somewhere over here right under that support level. But again, you're looking for volume to pick up. And where the volume picks up and where the price goes, that's where the stock is going to go. So if you're getting the breakout, which is typically what will happen, that's the traditional view, is that you'll get a continuation here to the bullish side. You'll want volume to pick up, but it doesn't always happen. So keep an eye out. That's why your entry point is above the resistance level right here. So that way you can be a little more sure that it doesn't roll over. Okay. Otherwise, you could say, hey, well, my entry point could be at this support level over here and over here. You could say that as well, but you really don't know if it's going to roll over. So anyways, that's kind of my thought and insight on the ascending triangle pattern. Again, these are just guidelines of what you're looking for. Okay, here's our resistance level. Could be creating a pattern, and if that pattern is created, you're looking for that breakout. That could be an entry point. Remember, it could still pull back a bit to retest that resistance level, which becomes support once it breaks it. And then your projection or kind of target area is about that range from the fatter part of the triangle. Take that and see how far it can go there. So that's basically the ascending triangle pattern. So welcome to the screen. Here I want to show you the ascending triangle pattern with ticks and candlesticks, so that way you get a little better insight on what it looks like. So here we have HOG, or Harley Davidson, from 1991 to 1993. It's a good example because I find that it's very clean and clear cut. The stock was right around $1 to $3 a share. So stock price continued to appreciate there with times right at the beginning. And I find that this pattern works out very well for moving prices to the upside. Okay, so basically what happens in 1991 is we got into a resistance level right around the $4 range, and you can see those swing points hit a couple times, and the stock price also tried to continue to compress into that triangle level. So between $4, we were hitting that $4 range and then moving back down to $2.50. Then we hit it again at $4, moved back down to $3. And then finally, when we hit it kind of a third time, so you could say kind of a double top that broke out, then we finally broke out past that $4 range and noticed the increase in volume. Yes, it was a minor increase in volume, but it did pick up and allowed that stock price to continue moving into higher prices with time. So anyways, that's basically the ascending triangle pattern, and I find it works very well. But you can see also that sometimes this can confuse you with a double top to where stocks could actually roll over. So that's why it's close and important for you to pay attention to what's evolving also on the lower range or the support level of the stock, and then looking at when things break out. Let's look at another example here of one that hasn't fully evolved or matured yet, but I want to show you one that's evolving. So here we have American Express, which is 2018, 2019, which is very recent to the current time of the video recording. So as we look at this right around the $104 range in American Express, you can see we're creating resistance right around that 103, 104 level. So it's hitting it maybe 4, 5, 7 different times. And as we go from 2018 January to about August time, you can also see we go from about $88 to about $100. So the stock price continued to move higher from 2017 to 2018. We got into $104 a share. We pulled back to about $88 a share. We got back into 104. We pulled back to about 92. We got back to 104. We pulled back to 96. Got back to 104, pulled back to 100, and then we finally broke out right here at about $104, $105 a share. Now the volume still is not increasing in a big way, so it's not an increase in volume on the breakout yet. It could happen and it could evolve, and more volume could pick up with time because this is the weekly chart. So, it may take a couple more weeks for the volume to pick up, but we'll see with time if this pattern actually pans out and works out. But you can see that here's kind of a pattern that we're looking at as it's evolving into the future, and we're not really sure if it's going to evolve and manifest into a good trading pattern. But nevertheless, that's a pattern right there that you can see on screen that's evolving right now. So thank you so much for joining me in this week's video. I hope you found it helpful and insightful to learning a little more about technical analysis. And if you want to see other great training videos like this one, be sure to hit the button right over here on screen and get on our newsletter list, or hit the link right below this video. When you go to that website, enter your name and email address, and I'll be sure to send you a newsletter as we release new training videos, courses, or even great books. Thanks again for joining me, and I hope to see you in my next video.